How's it going? Hope you're all having a wonderful day. I'm Trey with 2X Trading, and I'm going to be diving into a weekly recap of this week's top opportunities, those being the top winners, and as well as the losers of this week, what to avoid and what to look for throughout the week. So, starting off here, I'll break down into two sort of things, a good daily chart and a bad daily chart. Whenever I start looking at a stock, I am always looking over the bigger picture. I always want to make sure I'm only trading stocks with a good bigger picture and getting rid of the ones with the worst, a bad big picture. So a bad daily chart or a good daily chart. What are the definitions here? A bad daily chart I define as something with really key resistance it's trading into or above, not above, trading into or below. So that meaning there's a lot of prior resistance areas that this stock is going to have to get through to get moving. I don't want to be in something that has that. I want to be in something that's clean and moving. And the second one being something had a very weak breakout. If it had a super weak day one breakout, I do not want to be trading this. So to give you some examples of what those look like, I'll dive into here what the winners are. So starting off with the winners, we had URGN. This stock had a very strong breakout today and provided a very easy money trade. So what do I notice first things first? On day one, we had a breakout through key resistance of 13 and of 16. Here's day one. Broke out, consolidated, broke out later in the day. Now, the next day proceeded to consolidate and set up a multi-BR. A multi-BR is a trend line that had a trend line of, I call a multi-BR a trend line that has multiple pivots off of it across multiple days. So this trend line starts here in the after hours session of yesterday, and then here today and this morning we had multiple pivots off of it in the pre-market session as well as the open. Along with a clean multi-BR setup, we were also now backtesting and holding up this prior level at the all-time highs of 16. That turning prior resistance now into support. So what does your trade look like here? On this trade, your entry is going to be over this candle, this 15-minute inside, with your stop loss to the low. The reason I'm playing a 15-minute inside or a 30-minute or an hourly, those are my three main time frames. The reason I play those three time frames is because no matter what, when you're playing one of those, you will have all of these smaller time frames also lining up with you. So I'm playing a 15-minute. Every single time frame below the 15-minute is also going to be breaking out. Same goes for the hourly. If I play the hourly, I'll also have a 30-minute, a 15-minute, and so on breaking out with me when I take that trade. The more time frames you can make line up, the better your trade will be. So here on URGN, in the morning, we get a 15-minute inside, entry over the top with our stop loss to the low. This giving you about 50 cents risk on this trade with your entry at 16.90 and your stop below 16.40. So 40 cents risk here, and you catch a rip up into flagpole. Flagpole is the top where your trend line starts from, the high. That's about 4R on that one rip into flagpole. From there, you want to take profits into flagpole, and you want to leave the rest for momentum. Momentum strategies can vary. A lot of people do different things. They follow EMAs or certain studies. They'll, maybe just hold for a couple hours. I keep mine very simple and systematical. I will always take a piece off into my target, which on these multi-BR, any BR setup is going to be flagpole, the high, and then I'm following momentum on a reversal strategy. A reversal strategy meaning I will be out on the first candle to make a new low on the time frame I choose. Lately, it's been a 15-minute reversal candle. So that meaning you want to be all out on that trade on the first 15-minute candle to make a new low. On this trade here, you're on this, and you're riding it all the way up here, all the way into about 22.20 a share. So you're catching this whole move up with just following 15-minute candles. The first one to make a new low finally wicks you out here, and you're out of the trade. That's a great trade, probably over 10R, one of the best opportunities I've seen in a while on this trade this week. Now the next one, is this a clean daily chart? Let's go through the criteria again. On day one, we have a gap up, clean room, only key resistance we have, 180 and 220 with this gap to fill. Through that, we have clean room all the way up until, $384, this area up here. None of this is key resistance. This is just nothing on volume, a downtrend. This here, though, this is a gap down. Gap levels are always going to be significant. They're where you want to be wary. Other than that, though, no key resistance, very clean daily chart. So, on day one, what do we get? We get a big rally up, and then now we come down, we pull back, and we pivot off of the trend. Once we do that, we finally set up a multi-BR on day three here. Your entry is going to be on the 30-minute inside. We have a super tight candle here with a 30-minute inside, breaking the multi-Babe Ruth. We're entering over the top with our stop loss to the low. The reason I like these candles with these tighter sort of range on a inside candle It's because your risk reward is so much more in favor of you. If this trade breaks out, which it did, you have huge, 5-6R risk reward easily in your favor. And if it stops out, you lose 1R. So that's a trade you want to take. We take this here over the top at 154 with our stop loss below 148, which is 147. Gives you 8 cents risk. Into flagpole here, you're up about 3R. So, 4R, you're about 4R into flagpole. And then you give it momentum, for a move up to 60 cents, which is going to give you easy 6-7R trade. The way you could play this as well is all out on flagpole or a 15-minute reversal. From there, though, you could have also left a piece to swing on this trade. I think that's very much worth noting. Sometimes it may be worth just to leave a quarter of your position to swing and give it the chance to really get breaking out, which it did here. Once this stock consolidated throughout the next session, if you followed a 30-minute on the next day, you caught a whole move up to $3 a share, or you bail out into this big spike into 375. Either way, another easy money trade. This is another opportunity that gave you 10R plus in possible gains you could have made. Those two trades are huge, URGN and TUP. Both great examples of a clean daily chart and a clean setup. Talk here, this is a pre-market Babe Ruth. So a pre-market Babe Ruth is a setup that consolidates from the pre-market high into the intraday session, and you're looking to enter breaking it or backtesting it. On Talk, we had a backtest look. Once again, though, clean daily chart, no prior resistance, good to go, right? We know it's a clean daily chart. Look at the others. They look very similar. Talk here, what are we doing? Well, we see multiple time frames lined up, but nothing too clean on the 15-minute or the 30-minute. Where the money was, though, was on the 1 hour. On this chart here, the 1 hour, which I consider the best time frame to trade, if you get the 1 hour to line up, put it on. So here we got the 1 hour to line up. Your entry right here at 163 with your stop to 157. So your entry right here, 163, your stop right below at 157. Your targets for this trade are going to be very similar. You're entering over the top, stop to the low, and your target's going to be flagpole, which is 1R. Take a piece there. And then you can ride this up to 180 for, about 2-3R of a trade. Maybe you stop out on the 15-minute reversal for a 2R trade. Either way, very, very clean trading opportunity. I consider this top opportunity because of the ease of this trade. It taking so long to set up and being on a bigger picture time frame gives you plenty of time to plan ahead and be ready to take this trade. Very, very easy and stress-free to put this on. Now the next trade I'll go into here will be NEO. Let me clear out the drawings here. NEO has seen very, very strong, continuation on the daily chart. We look at this here. This screams strong, right? We've been making higher lows, and now we're finally breaking out on the daily. The only key resistance we have is $14. We draw that out here, and we notice, hey, over the past, 2 days, this has been held up pretty strong. 2 days ago in pre-market, we hit this 14 area, and we sell off hard. Now this morning here, we hit 14 again, we sell off. 14 again, we sell off. This now is a clear indication of a resistance zone. That meaning we have an ascending starting to form here. Draw your trend line now. Look, we have an ascending wedge forming up as well as we know a key resistance of 14. Adding into that, what do we have also lining up with this key resistance and this ascending pattern? We have another pre-market Babe Ruth setup. Draw your line from pre-market high, follow the pivots. Now what do we have here? We have a pre-market Babe Ruth, one pivot here, second pivot intraday, and we're going to be entering in over either the 15-minute insides or you also had a 30-minute lineup. Another super easy trade to put on. Bigger picture time frames lining up, put that on, right? We're entering right here over the top of this 30-minute inside, so your entry here would be 14.04 with your stop loss below 13.89. So that gives you about 14 cents of risk. Once we get up into this, through this level here, which you're playing the breakout. You're not playing for the pre-market high target here. When you're playing with an ascending, you're most likely going to catch a breakout. So that's what you're going to play for. So once we get rallying now, your target's just going to be all out 15-minute reversal. What do we get? You get a big rally up, and then you finally get a reversal up here at 14.40. This gives you a pretty easy, about a 3R trade. Just following the 15-minute candles and being ready for the 30-minute inside to set up and playing that break. Now the next one I'll get into, MKFG. Once again, look at this. Look how similar all these daily charts look, right? We're breaking out. We're above key resistance. We're not down in the bottom right, of the daily chart down here into all this consolidation. We're through it all. So MKFG, clean daily chart. Only key resistance, 226. On this day here, we start a multi-BR. Day 1, We run up, break out, and then we reject. We start our trend line now on day 2. Once we get this pivot, I'm drawing my trend line. Now on day 3, what do I notice? In the morning, we hit that trend line and we pivot. This stock did not give you a huge move. But what did I like about it? The risk reward you had. Once again, you have insane risk reward for a move to 210, and if it squeezes through, even better. On this day, it didn't squeeze through, but you had 3R to flagpole. Your entry here being 199, your stop loss down below 196, so giving you 4-cent risk. You catch a 12-cent rip up for 3R on this trade if you take profits into flagpole. If you don't and you leave it all for a 15-minute reversal like the others have, once you hit flagpole, your stop is right here. So you stop out for 2R on this trade. Another super easy trade where bigger picture time frames are lining up. It's not something you have to be fast about. You have time to prepare, get your orders in, and follow your plan on this trade. Works like a charm. You make an easy 2-3R. LPCN. Here's a tricky one. This one actually did trick me because I played it without realizing what was really happening. Now, you could say this daily chart looks great. It looks clean. It looks like it's breaking out like all the others. But here's the key thing. The reverse split. When you get a reverse split on a stock coming from 20, 30 cents, the only reason they are doing that reverse split is to stay listed on the market. They do not want to be delisted. If they stay down there, they're going to get delisted, and that makes it crappy. So what this crap company does is rather, actually doing great things for shareholders, they do a reverse split to make share value go back up high enough to keep them listed on the market. And that's what they do here. So in all reality, all these people that are still in here from the 60, 50 cents range, they're most likely in the red still. They're most likely still red, or they're getting break even on this gap day here, which means you will most likely be flooded with sellers. So your fundamentals are lacking here. You don't have the proper fundamentals for this to be a super clean name. If you were to trade this now, what happens? You get wicked in and stopped out. So once again, be wary of the past. Reverse split, crappy news comes out, you're getting caught in a big lacking fundamental trade. You're getting caught in a trade that will most likely 9 out of 10 times stop you out with a crappy wick, just like this one did. CTCX. Here's one looking at the daily chart. What do I notice? This is what I consider a crappy breakout. What did I say at the start of the video? If it has a weak breakout on the daily chart, I'm not trying to trade that. We have a weak daily chart, so we catch a really small breakout, and we're also trading into key resistance. This 6 level, that's going to be key resistance for you. What does this stock do? Now, yes, this stock actually does work. On the 30-minute here, if you were to play the 30-minute inside, wrong candle here, you caught a really sweet trade here for about 3-4R. My problem with it being is the daily chart lacked. If the daily chart lacks, I'm not going to trade the 1 out of every 10 that ends up working. This was 1 out of the 10 that surprisingly worked. But am I okay missing that? Yes, because I don't want to catch the 9 others that don't work. I'm not just going to start trading crappy daily charts because I see one work. That's not happening. So when you have a bad daily chart, there will be a few anomalies that do work, but be okay missing them. I'm fine missing this trade because I don't want to catch a trade like LPCN, right? So don't trade a crappy daily chart. That's what you can get from there. They do work sometimes. I'm showing you proof that they do work, but they also don't work a lot of the time, like LPCN did not. CEI. Here's one that I considered a decent daily chart. The reason I considered it decent is because we had this news gap here, this news breakout. We consolidated and we had another one, and we broke out over this high, making me think that we have pretty clean room, back up to at least, 150 maybe, or even this 170 area. Now, the problem with this stock and why I didn't trade it is because of how it moved. So when I looked at the stock in the morning on the 30-minute, I did not mind these candles right here. When I saw these 2 30-minute insides, I was like, this is solid. I want to put this on if I can. When did I stop liking it? Is when it went choppy like this for about 5 or 6 more candles. When you have these penny stocks that just go super tight consolidation and just chop all day, you do not want to be taking that trade. These will most likely break down or wick you in and then break down after. No matter what, when you have this super choppy price action, you will always be caught in crappy price action after you run that trade. So avoid the crappy price action. Don't put these ones on. BTM, a top winner here. This one, once again, with an ascending pattern. So here, let me get rid of that arrow. And this price level here, we get a clean daily chart. Why? Big breakout, no key resistance other than this 4 level, and we have an ascending forming, consolidating over multiple days. What do we have on the ascending here on the lower time frame? Let me go on a 1 hour so you can get a better view of it. we have this 386 level being rejected once, twice, 3 times. After that third time we rejected it, we set up an hourly inside candle that can be swung. Now, you can squeeze it. Somebody could say, hey, why don't I squeeze it to this candle that's 3 cents? Because when you're playing these, you're playing for a swing trade, which you will hold overnight. If you were to hold a 3-cent risk candle overnight, you very much risk your account being blown up. If this stock were to gap down tomorrow or just sell off at the bell and open at 340, 350, you'd be down 6-7R in one trade. You never want to put yourself in a position where you can be down that much in one single trade. So rather tightening it that much for a swing trade, I don't mind tightening that much if it's a day trade, but knowing that this is going to be a swing and tightening that much is a terrible idea. So rather, you're going to put this trade on with a bit more room over this hourly inside back here. So your entry would be right here over 383, and your stop loss being under here at 370. Now, once you enter, what do we get the next day? You get that 13 cents, 12 cents risk, and we catch a 55-cent breakout, almost a 5R trade. On this trade here, what are you going to do different? Well, once this starts breaking out, you're going to follow 15-minute reversals. The first 15 minutes to make a new low, you stop out. We don't have one all the way up until 434, which is finally where you stop out, almost catching the top of this trade. Overall, a really clean ascending triangle breakout trade. BDRX. Here's what I wanted to dive into again, just to show you how a crappy daily chart can once again work. But this one wasn't so much on the crappy side, just so much as what you can expect when a daily chart has these sort of signs. BDRX, multiple wicks every time it would gap up, right? Gapped up, sell off hard. Gap up, sell off hard. Gap up, sell off hard. Over and over again. What do we notice now? On this day here, when we finally get strong news and once again break out, you see a clean multi-BR setup. What I do like about this, though, is it's also setting up a bigger picture flag. So this is a trade you definitely want to take, because if it breaks out, it could maybe get going all the way up into 980, but you have to be very aware of these past key resistance areas of 740, 850, and 980, because you're not just going to rip there. So what happens, though? We get a clean 15-minute high or low or 30-minute inside. I think we might have also gotten an hour inside, not the hourly, but we got a 30-minute inside as well, all to set up on this trade. Got trend lines all over the place here. Let me clean up a bit. There we go. So once you're taking your entry over the 30-minute inside with your stop to the low, this trade rips up straight into flagpole, right into that key resistance. But once again, knowing how this stock acts and how quickly it sells off multiple days in a row, you need to be aggressive with your profit taking. So once this stock rips up, you want to be all out into this area. Right when it starts reversing, you want to be out of that trade because you know it's going to do what the other days did. It's going to give it all back and quickly. BBIG, here's one I just want to go over, and this is actually a loser that you can be okay missing, but also it's okay to take. I like this trade because the daily chart was pretty clean. We've had some pretty strong action, then we caught a big breakout day with decently clean room back up to 750 and 9. Like, there was not much key resistance on this chart. It can totally squeeze. What it ended up setting up is a multi-BR. We have these multiple taps right here, and then we get a pivot around midday and your entry around late day. So we pivot here. We also had multiple things set up, like an hourly inside, which you could also have traded, with your entry being over the top. I like trading over the pivot because I knew this was pretty strong selling. So entry right here and your stop to the low. Now this stock the next day ends up breaking down and you stop out for a loss. This is a trade, though, I was okay taking a loss on. Why? Everything checks out. We won't always be right, but that's okay. Take your A-plus trades. Everything lines up. Put it on. Don't question it. If you lose, it's fine. That will happen sometimes. The biggest thing is when you win, your risk reward will be bigger. As we saw in URGN and TUP, those two trades alone can put you up 20R. That means if you risked $100 on URGN and TUP and you played them both right, you could have made $2,000 in 2 trades. When a trade like BBIG were to stop out for -1R, a -$100 loss if you risk $100, that's nothing. That's just part of it. Those were the biggest opportunities, though, and as well as some losers and ways to avoid losers throughout the week. Hope you enjoyed. Thanks for watching.